Hello, everyone, and welcome back to the GMS Weekly Podcast. I'm Henning, and with me, as always, is Ingrid. Ingrid, it feels like 2026 didn't even wait a week before throwing the world into chaos.
It really didn't, Henning. If this is how the year's starting, we could be in for one of those roller coaster years, where every headline seems to move markets. Politics, oil, freight, currencies, everything is pulling in different directions at once.
And we definitely felt that this week. The energy markets were rattled again after more geopolitical shockwaves, especially around Venezuela, Russia, and oil shipments. That sent a wave of volatility straight through shipping.
Exactly. Freight markets took another hit. The Baltic index slipped again for the fifth straight week, with Capes and Supramaxes dragging things down, even though Panamaxes managed a small uptick. Meanwhile, oil moved higher, pushing towards $60 a barrel.
And currencies were all over the place. The US dollar strengthened against India and Turkey, but it actually eased against Pakistan and Bangladesh, which gave those two markets a bit of breathing room.
Steel prices added another layer of drama. India had a strong start to the year, with steel jumping sharply. And then, just as quickly, it gave all of that back. By the end of this week, Indian plate prices were right back around $400 a ton.
That's a level everyone in this industry watches closely. When India drops back to 400, confidence tends to disappear very quickly.
And you could feel that on the ground. Buyers in Along became much more cautious. The rupee weakened again, and no one wants to be aggressive when the core pricing mechanism is swinging $30 in a matter of days.
Still, at least some ships are finally showing up there.
Yes, Aliaga managed to shake off the empty anchorage syndrome. One vessel has arrived, and a couple more are lining up. So it's not completely dead, but sentiment is fragile.
Now, Bangladesh is a very different story this week.
It really is. After being at the bottom of the price table just a week ago, Chattogram has bounced right back to the top. Demand firmed up and pricing recovered to around $400 for dry bulk, about $420 for tankers, and roughly $430 for containers.
But it's happening in a very tense environment.
Absolutely. The country is dealing with serious political unrest ahead of elections next month, protests, violence, and a lot of uncertainty. On top of that, supply is still thin. Only one new vessel arrived this week, although several ships delivered from last week finally cleared.
And there were also some banking delays. A change at the central bank caused some letters of credit to get stuck, which didn't help. Even though pricing improved, recyclers are cautious. They don't want to commit too much while everything feels so unstable. Which brings us to Pakistan, arguably the strongest market on paper.
On paper, yes. Steel prices there climbed again and are now close to $586 a ton, far higher than anywhere else in the region. The Pakistani rupee even strengthened a bit this week, which is rare these days.
So you'd think Adani would be buzzing.
You would, but it isn't. The anchorage has been empty for 2 weeks in a row. Yard upgrades and certification issues are still holding things back. Buyers are ready and willing to step in, but without enough HKC-compliant plots, ships just aren't flowing in.
That's a frustrating combination. Plenty of money, but nowhere to put the ships.
Exactly. And with supply expected to rise later in the year, Pakistan really needs to get those yards ready if it wants a bigger slice of the pie. And then there's Turkey, which seems to have gone into winter hibernation.
That's a polite way of putting it. The lira keeps sliding, now well past 43 to the dollar, and local recyclers are squeezed between currency losses and regulatory pressure. Deliveries are weak and offers are drifting lower, even if they look steady on the surface. So if we step back and look at the pecking order this week,
Bangladesh is back on top, Pakistan is just behind, India has slipped into third, and Turkey remains a distant fourth. The magic number across the subcontinent is still hovering around $400 per LDT.
and with Chinese New Year approaching at the end of the month, things could slow down even more.
Exactly. That's why owners with older ships and upcoming surveys may decide to test the market now while pricing is still holding together.
So tense, volatile, but not collapsing, yet.
That's the best way to describe it.
Thanks everyone for joining us this week. We'll be back soon with another look at how this fast-moving market continues to evolve.
Until then, stay safe and we'll see you next time.